Hey guys, Credible Crypto here with a new market video update. It has been a little bit over a month, I believe, since my last YouTube video update. And as much as I do like making these videos for you all, a lot of times, in this case, for example, after sharing a video, a lot of times there isn't too much to update on the day-to-day. My layout plans in the prior video about what I expect to happen, and if everything goes according to plan, then there shouldn't be a need for me to make a new video until there's more developing price action. And that's exactly what happened recently, which is why I haven't made a video in about a month or so, because everything covered in the last video shared over a month ago has pretty much gone according to plan. And so there wasn't a need for me to make a video. Well, recently, guys, over the last few days, we've had some developing price action. And at this point, I said, you know what? It finally makes sense for me to give you guys an update because PA has developed to a point where we're now reaching kind of the next fork in the path. And I want to talk about a few different options and scenarios that I see here about what I think will be coming in the coming weeks and months. So this video is a continuation of what we talked about from the last video. To give you guys just a very brief summary, I would normally go back and show you guys what I talked about in the last video and where we are today. But there was a user on my Twitter, a follower, who shared a post talking about how he just rewatched my last YouTube video and everything had gone according to plan. And so I'm just going to go through his post because he breaks it down quite nicely. And then we'll continue on with where we are today. But basically, he said, rewatch Incredible Crypto's most recent video, and it's insane to see this man's accuracy. He made these calls a month ago and they've all pretty much played out perfectly. So again, this is Bitcoin. From the last video, we were talking about how we may see a further dip into the green zone down here and then looking for a reversal to the upside. You can see here as price action developed, we got that dip. This little Y leg here is this little leg here. So we got that dip below it into this area of interest, and then we reversed as expected. That was Bitcoin. CRV, kind of the same situation, was looking for a push down into this region down here, and then a potential reversal. We got a push down into that region, as you can see, and then a reversal as expected. Ethereum was looking for a move down to monthly demand, this giant green zone here. So yeah, we front ran this monthly demand by, I think it was like 50 to 100 bucks or something like that. Just barely front ran it and then reversed to the upside. And then XRP as well was looking for a move down to the range lows for that triple tap price action and then a move to the range highs. And you can see here we got that triple tap and then a move to the range highs. So pretty much everything that we laid out there played out over the next month, which is why I hadn't made a video. But now, guys, we're going to continue on from where we are today with all that in mind, look at developing price action, and talk about where I think we're headed in the coming days. So we'll talk about Bitcoin first. As always, you know, Bitcoin kind of leads the market and has a big kind of pull or sway on the rest of the market at times. So from my last video, again, we were looking for that move down to this larger green zone. You can see just like Ethereum, we front ran it by like, I think a couple $100. This zone started at basically 98K. We hit 98.2K and then saw a reversal. And now we are correcting, and we've been in a correction since the middle of July. It's been about a month long that we've been in this correction, just shy of a month long. Let's talk about where we are now. I recently tweeted that there are 3 scenarios I want to cover in my next video. 2 of the 3 have us reversing right around here. And a move below 110K eliminates one of them. A move below 105K eliminates the second. And that would leave just the final scenario in play if we go this low. In all 3 cases, high time frame structure remains intact, so don't lose your mind here because of what is, for all intents and purposes, noise on the lower time frame. So let's talk a little bit about these 3 scenarios that I was referring to in this tweet from a few days ago. And we'll go over each one of them. We'll talk about relative invalidation levels, and we'll also talk about which ones I think are most likely of the 3. 2 of the 3 scenarios will have us reversing right around here. And this was tweeted when we were right here at the 112K level. We're at 115 now, so we have gotten at least a low time frame reversal. A move below 110K eliminates one of them. So one of them has invalidation at 110K, which is this level right here. As I mark these off, you might start getting an idea of what the scenarios are and what constitutes invalidation. I'm going to make these lines red. We'll mark them off. So we'll do invalidation for scenario 1. And then the next one was a move below 105K eliminates the second scenario, and 105K is going to be this level right here. So I'm going to write down invalidation for scenario 2. And then finally, the third scenario, and invalidation for that third scenario is a little bit more broad. So we'll talk about that here shortly. But the point that I said as well was that it doesn't really matter which of these 3 scenarios we get, because irrespective of whichever one we get, high time frame structure will remain intact. So invalidation for the larger 5-wave move is still down here at 75K. Why? Because we printed our first high time frame impulse off of this level, okay? Now that high time frame impulse I have ending here, and again, we've talked about on Twitter at least how essentially all the chop that followed the end of this structure was some sort of a corrective combo, right? Corrective combos are basically sideways moves that aren't impulsive that kind of chain together to form a larger correction. And again, I talked about this more in my last video, so we won't go into too much into depth about the structure of the correction itself. Just know that the sideways action that we get following an impulse is a corrective move, and it's basically consolidation before the next impulse, right? Now, the corrective move can take a lot of shapes and forms. After printing the sideways price action and almost hitting our area of interest, we then saw a reversal to the upside. Now, the big question that most have here, and this is the right question to be asking, is this move to the upside the start of the next impulse? Is this move to the upside the start of this next 5-wave move to the upside? Because if that's the case, then we won't see below 98K until the end of this bull market, essentially, okay? If this is not the start of the next impulse, then it opens up doors for a correction lower. Now, again, remember, a correction lower doesn't change the fact that high time frame invalidation remains at 75K. So we could technically go above these highs, we could technically come back below these lows, we could technically retest this level here, and high time frame structure will not be invalidated. And now people ask, well, how does that make any sense? The same reason why back here when we were trading at 105K, we had this move above the highs that failed, and then we subsequently made a move back below the lows, right? And then following that, we saw another impulse. And again, back when we were trading here, we talked about how the origin of this impulse here was down here at 56K. And so 56K was the high time frame invalidation on this correction. So even though we made new local highs here, the same way we've made new local highs here, it's still technically possible that this is a deviation the same way that this was a fake out to the upside. And a move back below to the green zone here would be similar to our move back below these range lows before the actual reversal. So again, just like we had here where the move down here didn't end the bull market like many thought it would, didn't all of a sudden break market structure like many supposedly claimed it did. The same thing we have here, right? We went on to make new all-time highs after deviating below this level. In that same sense, we could technically go above these highs of this range here. We could technically make a move back below the lows, and then we could see the next 5-wave impulse, okay? So this is why high time frame validation remains below 74K and not below this level here, because if this move up isn't impulsive, meaning if it's just a three-legged corrective move, then it allows for this type of PA to play out without actually invalidating the higher time frame structure. The reason that it's important to be able to identify or at least be aware of the possibility of this being corrective and not impulsive is because we do get situations like this where we'll make new all-time highs, and if you can't identify whether a move is impulsive or corrective, you may assume that a break of these highs means a breakout, when in reality that's not always the case, as can be seen on Bitcoin here. And there's many other examples. In fact, I shared a recent example on Convex Finance, CVX, one of the alts that I'm very bullish on, about how we had a similar move, and I'll just show you guys here, where we actually went above the highs of the impulse. People assumed that the correction was done, and then we fully retraced it. And I'll show you guys that here. So you can see here that we had a nice clean 5-wave impulse, one of the cleanest ones I've seen in a while, to be honest. We had a correction that went down to about $3.80. We had a corrective move to the upside. You'll notice, again, this isn't impulsive. Lots of overlap, lots of chop, unlike this impulsive move. And because this was a corrective rise, even though we made new local highs here, it ended up being a deviation, then we came back to the downside. And we can see that as PA developed, we ended up moving back down all the way to the range lows here, took the lows here, and then we saw a relief bounce. Now, as I said on this chart here, I'm not quite sure if the bottom is in on CVX just yet, but the point that I'm trying to make is that we're allowed to correct down, move above the highs of the start of that correction, move back below the lows without breaking high time frame structure. And I previously said as well in CVX that now that we've printed an impulse, the high time frame invalidation is technically down here around $2.25. So even this orange zone is technically fair game, and it's a common place to end up on these types of extended impulses in terms of corrective price action. So do not get phased by a potential move like this, okay? Now, this is scenario 3 of the 3 scenarios that I talked about, and that's why I said that the invalidation for this scenario is a bit more variable, right? So scenario 1 and 2 are the more bullish ones, and for both of those scenarios, we shouldn't see below 110K and 105K respectively. If we break below these two levels, that invalidates the idea that the next impulse has started, and that means that we are likely still in this corrective structure that began here in May. And in that third scenario, again, that allows for us to come down to that daily demand that we previously front ran. It allows for us to even go a little bit lower than that. It's not an issue. And it allows for us then to see a full-on reversal in the start of the next impulsive move. So that is actually scenario 3 right off the bat, just to show you guys what scenario 3 is. Scenario 3 assumes that this correction that started back here in May that we've been seeing is still ongoing. That this move to the upside was just a 3-legged corrective structure, and that we may still have a move down below these lows left. Again, very similar again, to what we saw in CVX. The only thing with Bitcoin that's different from CVX is that an argument can be made that part of this move is impulsive, okay? And that's where scenarios 1 and 2 come into play. So let's go ahead now to scenarios 1 and 2. Now, I'm going to start off by saying that at this point in time, based on developing price action, I do believe that either scenario 2 or scenario 3 are most likely, okay? I think that scenario 1 is the least likely at this time based on developing price action, but we're going to go ahead and we're going to just discuss it anyways, okay? At this point in time, scenario 1 is pretty unlikely in my opinion, okay? For all intents and purposes, I want to say scenario 1 is pretty much out the door. But scenario 1 was the idea that we were impulsing and we were missing a fifth wave here and that this corrective structure was a subwave 4, okay? And the reason that 110K was the invalidation was because we know that fourth subwaves shouldn't enter wave 1 territory, right? And our wave 1 territory is this little move right here. And so a move back to 110 would invalidate this as a fourth subwave. But based on developing price action, this potential fourth subwave has now gone on for so long and has corrected so deep that it's quite unlikely that it's even a valid count anymore, okay? Anytime you get a fourth subwave that is so disproportional to the second wave in this case, and that retraces so close to the first, so disproportional to the second wave in terms of both time and price, usually that means that this is not the correct count, okay? In other words, this correction, this fourth wave is so big and so deep relative to the second wave that this is probably a correction of a different degree. It's probably not of the same degree as this second wave here, meaning it's probably a correction of a higher time frame or on a higher, larger scale than the one that happened here. And so because of that, this scenario 1, despite not having hit 110K yet, for all intents and purposes, invalid in my eyes, okay? So that leaves us with scenario 2 now and scenario 3. And again, scenario 3 implies or assumes that we are still in a larger corrective structure, starting with the correction that began here in May. Whether that corrective structure takes the shape of a running flat, in which case we don't breach these lows, or whether it becomes an expanded flat, in which case we do break these lows, is yet to be seen. But again, scenario 3 could look something like this, a bit of a deeper correction here, and then a continuation with the impulsive move. And that again assumes what we call a running flat, but basically assumes a corrective structure in which we take these highs, but we fail to take the lows. The alternate then is the expanded flat structure, which instead of us making a dip like this and then correcting, we continue to dip further down. We actually breach these lows here. And in this case, we would test the area that we front ran, and then we would see an impulse there. Okay, this is again scenario 3. Scenario 2, which is the more bullish scenario at this point in time, scenario 2 assumes that we actually began the next impulsive move off of this low here at 105K. A reason that this is my kind of the most bullish scenario at this time is because if we go down to lower time frames, we can see here on the lowest of time frames that we had a pretty clean impulsive move off of this level here at 105K. Okay, you can see starting from this low here, we had a 1, 2, 3, 4, 5. Okay, so this lower time frame impulse is pretty clean. Okay, and you can see it looks nice here. And then we saw a subwave 2 here. Then we saw another impulsive third wave here. We saw a little corrective subwave 4 here. And then we saw a final fifth. So we have a completed 5-wave structure here, okay? And so scenario 2 assumes that the next impulse has begun, starting with this 5-wave impulse off of these lows. And we've printed our first 5-wave impulse of the next impulsive structure, okay? So this is scenario 2. And scenario 2 assumes that the first impulse, 5-wave impulse, is complete, which is why our invalidation is 105K. Okay? Now, what I also want to point out is that, yeah, this impulse doesn't start at the absolute low. Okay? And so a lot of people who are learning Elliott Wave for the first time, or may not have studied it as extensively as I have over the last 8 years, a lot of times the assumption is that an impulse must start off of the absolute low. And so what happens is, you get counts that begin here. The assumption is this was the first wave. We have a second wave here, and a third wave, and a fourth wave, and a fifth wave. And so why do I start the impulse off of a higher level, off of midair? I've seen over the last 8 years that I've been doing this, and those who've been following me for some time, I've seen this as well, because I've pointed it out over the last 8 years whenever it's occurred. There have been instances, and again, I primarily focus on crypto markets, so I can't say this also applies to other traditional markets, But there have been instances in crypto markets where impulsive price action tends to start kind of in midair, meaning instead of the absolute low being the origin of an impulse, sometimes we get some chop. We get a corrective structure that doesn't end at an absolute low. We get a corrective structure that kind of ends in the middle of a range. And then we see an impulsive move out of the middle of the range rather than off the range lows. And that gives us this impulsive price action with an origin not at the absolute low, okay? So with that out of the way, the assumption for scenario 2 is that our next 5-wave move has begun. We're currently working on a subwave 2 before we then see expansion for the next move to the upside. That should ultimately take us to 150K plus, okay? If this is the start of the next 5-wave move to the upside, similar to the 5-wave move that we got right here, and we've just completed the first wave of 5, what that implies is that we're still missing a major third, a major fourth, and a major fifth. And if this first wave went from 105K to 124K, aka a $20,000 move, the third wave should be even larger than that, typically. So this third wave, which hasn't begun yet, should move us to at least 135K, assuming it starts now. Odds are it won't start off with this level, but assuming it does, that's a minimum of 135K, okay? And then realistically, the third waves are often larger, but let's just say we get to 135K. We have a fourth wave, and then we have a fifth wave. So again, minimum 150K for this next leg up if it has already begun, okay? And that's relatively, I would say, a very conservative target, 150K plus at this point in time based on developing price action. Now, if this is the case and the scenario 2 has begun, what we're seeing now is a corrective subwave 2. And there's not too many rules for this corrective subwave 2, except that it cannot go or should not go below 105K. That's why this is our invalidation. This structure can take many shapes and forms, just as this structure right here took many shapes and forms, right? We had a combination of corrective moves that basically meant a lot of chop before the next impulse began. In the same way, this one can do the same, meaning we can see price action that goes like this. We can make what do we call this? A running flat wave subwave 2, meaning we could continue to chop while moving up for some time. We could also do something like this where we move up, clear these highs, then come down, clear the lows, and then go up. That's also possible. Or this could be the correction wrapping up here, and we could begin technically impulsing off of this level as well. There's many possibilities here on the lower time frames, okay? But in all these scenarios, the bottom line is we should not expect to see below 105K. You'll notice that we do have a very key area of demand right here. This last cluster of consolidation that preceded this breakout above what was at that time prior all-time highs at 112K. So this area is a significant area of support, and this is also the best RR for longs, assuming that we're in scenario 2, meaning assuming that this is invalidation, that we're not going to breach this level, and assuming that this is a completed impulse. If we get any dips into the 107 to 110K region, that is the best chance for us to see a full-on reversal, assuming we're not going to breach 105K, and the best risk reward for long entries, okay? So as a trader, this is the area where you want to be doing action, okay? Now, on the lower time frames, we have some key levels here, okay? And let's talk about those lower time frame levels and what I'm looking at here on the lower time frames. So on the lower time frames, we have this key area of supply. You can consider this area resistance, and you can actually already see that it is acting as resistance. It's doing its job here. Go to the higher time frames here, and you can kind of see where this cluster of consolidation occurred. And you can see that we consolidated here, then we broke down. And then we have also this, you can call it an inefficiency or a gap below this H12 candle. So an inefficiency or a gap is kind of like a liquidity void where you have a candle, if you have a big move, and then a small candle, and there's no wicks overlapping this area here. And so this area should act as resistance. Sometimes what we'll see is we'll see price move up to kind of wick into these inefficiencies, and then we'll see price continue down, right? Bottom line is if we're going to reject here in the lower time frames and come down to the green zone, or if the bottom is not already in here at 111.8K, then we would expect a potential rejection in this red zone as we push into it, okay? If we manage to clear this red zone, then there's a higher likelihood that we're not going to see something like this. If we manage to clear the red zone, then it's highly likely that we're going to see something like this, which is that, again, that running flat structure, that running flat corrective structure that I previously mentioned, okay? So the red zone here is kind of key. Then it's also worth saying that if we reject here on Bitcoin and we make a move down to potentially the green zone here, then of course alts will dip a little bit as well. But this is the key information here on lower time frames that I want you guys to focus on. For those who've been following me on Twitter here, you'll recognize that this lower time frame range that I've marked off here, we actually identified this lower time frame range and we were actually able to trade it We identified this lower time frame range here. I posted about it on Twitter, talked about how we had a potential long opportunity on Bitcoin off of this, what we call a triple tap, off of this range low to the range highs. Went ahead and actually shared a live entry on Bitcoin based on this setup right here. We went ahead and long the range lows, targeting the range highs. And we can see today that we got a beautiful move off of those range lows, and we've now moved to the range highs. We're not quite there yet. We're just a little bit shy. But the idea behind this was a low time frame trade opportunity into what we know is that higher time frame area of supply. Initially, I showed you guys this structure here, this being that area of supply. But over here, I've kind of narrowed it down. We can go on, I think it was like the 3-day level. Yeah, so I just marked off this 3-day order block. What I just showed you guys is that we have this inefficiency here. We can use that 12-hour candles to mark it off. And again, we tend to typically wick into the inefficiencies. If we're bearish and if we're going to continue lower and the correction's not over, we'd expect a rejection here, which is also why I've made my take profit target the range highs, which as you can see, just coincidentally matches the level of the inefficiency that I just talked about, right? So the idea is that in the short term, while we are in this corrective structure, we don't know at this point in time if we're going to break through the red zone here and then form a bullish structure and continue up. We don't know if we're going to reject the red zone here, potentially come down to that best risk to reward area for longs, right? And then form a bottom here and then reverse. We're not sure. So for the shorter time frame trades, we want to take profit into resistance and we want to watch to see how price action develops. If we manage to get back above the red zone here and we form some sort of a constructive setup, we can long again. If instead we reject into the red zone here, we can look to re-enter along at the next best area of interest with a stop loss at the invalidation, right? And again, from the high time frame, what this looks like is if we enter this zone here and we have an invalidation here, if scenario 2 is going to play out, we know this is headed to 150K plus. That gives us, just by blind bidding the green zone, that gives us a 7R trade, meaning for every dollar we're risking, we stand to make $7. It's a good trade based on risk to reward, based on our potential upside, assuming that, this scenario 2 is in play and we're not going to go below 105K. If 105K breaks, then we get stopped out. But again, with every trade, there is some level of risk, right? We have to understand that there's no guarantee that we hold here. If we're getting that scenario 3 where we're going to come down and correct deeper, then it's possible this level gets stopped out. But as we've narrowed it down to just 2 viable scenarios right now, and one of the 2 has us potentially bottoming at around 110K with a clear strict invalidation at 105, targeting 150, that makes for a worthwhile long attempt, okay? And so if you guys follow me on Twitter, if I do end up taking this long, you'll probably see it posted and shared, just like I did with the last Bitcoin long that is now well in profit. I don't necessarily post every trade that I take, but I often do post certain trades that I think are high probability setups. I've been lately using this app called Mass. You can literally download it on your iPhone or your Android. And there's zero KYC that you can actually use in the US. So US customers who always struggle to find a place to actively trade, you can actually trade perps using this platform directly on your iPhone or Google device. I am partnered with them and I've been using them for some months now and we've had tremendously positive feedback from many of my followers. If you guys are interested, you can simply scan the QR code here on the screen to download the app and you can follow along with my trades on Twitter. So with that being said, guys, this is the next best long opportunity. Plan on locking in gains on the first trade here and looking to re-enter here. Those are the 2 scenarios on Bitcoin that I currently see at this time as most likely, okay? Now let's talk a little bit about our altcoins and how these scenarios play into our altcoins. We're going to start with CRV. It's obviously one of my more popular ones. So CRV, again, like Bitcoin, we had multiple scenarios that could have played out. With CRV specifically, there are kind of 2 major areas of resistance to the upside. We've now filled that inefficiency that I've been talking about for some time now, or we've dipped into it. I guess it's not technically fully filled. It would have been if we got down to about 84 cents. But we've now dipped into this zone. We actually took a CRV long as well off of this zone here. And again, just like Bitcoin, I did share that one live at the time of entry. And that was shared right here. Again, entered at 0.89. Again, we were looking for a move into these range lows. We had these equal lows built up, looking for a move into these equal lows into this local area of demand for reversal. And as you can see, we got a move below those equal lows right here, tapped that demand zone, and we're now seeing a reversal. So for CRV, I'm in a scalp trade as well. And a scalp trade just means a very short-term trade on lower time frames. Again, on higher time frames, I'm still in higher time frame swings on CRV because remember, if you're not an active trader, you're not actively trading lower time frames, your focus should simply be on the higher time frames. And remember, the higher time frames are incredibly bullish. And on the higher time frames, we're basically targeting new all-time highs above $6.78. And this lower time frame action, for those who are focusing on the higher time frames, you can ignore the lower time frame stuff, right? But for those who are active traders like myself, we're constantly doing this every single day. I like to practice trading on lower time frames, and I keep lower time frame trades separate from higher time frame ideas. It's important to recognize that everything that I'm talking about here on the lower time frames does only apply to active traders and does not apply to longer term holders or spot buyers. Spot buyers, you're continuing to accumulate CRV at these levels for a move to $6 plus. It's as simple as that. Active traders, you may be interested in this because you may be trying to learn how to actively trade these lower time frames as we're doing. So with that being said, guys, on CRV, on the lower time frames, again, high time frames remain incredibly bullish and will remain bullish no matter what happens here on the lower time frames. But on the lower time frames, there's two areas of interest or resistance to the upside. That this local supply here at around 98 cents to $1.07, and above that, the range highs. Okay, we need to clear the range highs for this to be a full-on reversal, because as it stands, technically, CRV could move into local supply, reject, and make another low, right? We don't have yet impulsive price action off of these lows. We do have quite choppy price action, and so we're not 100% sure whether we're getting a full-on reversal here or just a dead cat bounce into the next area of resistance before the next leg lower. And again, zooming out, we could technically get another leg lower. We have a little local area of demand here. You can see this little move down before this strong move up. That little local area of demand remains untested. We found a support right above it inside the inefficiency. So it's possible that we're just moving up. You're going to get another leg down and then see a reversal, okay? High time frames, again, on CRV remain unequivocally bullish, so you don't have to worry about the higher time frame price action. But if you're actively trading the lower time frames, this is the first area to be locking in gains on lower time frame trades. And if we manage to clear local supply and push above these range highs, but at this point, we should be hopefully seeing some impulsive price action. We can then look to reposition for another trade if the opportunity presents itself. Let's go ahead and take a look at FXS. FXS is another one that I've frequently been posting about lately because the high time frame setup is so incredibly bullish, okay? FXS fundamentally is decent as well, but I know a lot more about curve and convex than I do FXS. So my focus on FXS is simply from a technical perspective here. And we can look at this chart zoomed out, and it's just a very, very clean chart. And this is the type of stuff that I like to buy when we've seen a 90+% drawdown, when fundamentals are strong and the chart looks really, really good for a very low risk, high reward entry to the upside, okay? So I'm viewing FXS as a chart with one giant range, okay? And I'm seeing this as a deviation below these range lows that were established back here in 2022. I'm seeing the range highs at this level here at $14, and we're currently trading at $255, okay? What that means is that if we manage to reclaim these range lows, which I think that we will here shortly, then we would expect a move to $14. And that alone is a 6x to the upside, okay? Once we get to $14, this is going to be an area of resistance. It's a good level to take profits on shorter term trades, but ultimately would then look for some sort of a pause or consolidation and continuation higher, okay? Like CRV, like CVX, like many of the coins that I've been talking about, into the end of the cycle, I suspect that many of these coins will be making new all-time highs. And the reason I say that is because the last cycle top that we had in 2017, we have not seen a massive altcoin run since then. And again, Bitcoin dominance can support that idea. I'm not just saying that out of thin air, but we can see that Bitcoin dominance has been on the rise since 2022. And big alt seasons occur when we get drops in Bitcoin dominance. This sort of drop in Bitcoin dominance happens when altcoins are popping off. So you can say that we had an alt season back here in 2020 to 2021, but this wasn't the same as the alt season that happened back here in 2017 at the peak of the last bull market. And again, I've said many, many times that all my altcoin targets, the targets that I've had for CRV, CVX, HBAR, XRP, all those are altcoin targets for the end of this cycle, which we're now approaching, the end of the final fifth wave on Bitcoin after the blow off top, when we get that rotation at the highs, as money flows out of Bitcoin after a blow off top. And that is when we get the biggest alt seasons. And that is when I expect many of these altcoin targets to be met and many of these altcoin targets to make new all-time highs. These altcoins that make new all-time highs for the first time since 2017, when that starts happening, that is when we'll see Bitcoin dominance fall once again, just like we had here in 2020. But this time I expect us to breach below the lows at 35%. The bull cycle that began in 2018 will finally be coming to an end as Bitcoin dominance falls below this level. Again, that will be when the alt season that I'm expecting after Bitcoin tops is kind of running out of steam, okay? So my point is that it's too early to be bearish on alts. You start getting bearish on alts once we're back below here, because at that point, when we're sub 35% Bitcoin dominance, it implies that Bitcoin is already topped and that altcoins have now absorbed a lot of the money flow from Bitcoin and have pumped tremendously. And that is why Bitcoin dominance is at the lowest that it's ever been, because altcoins have had a massive rally. At that point, we can start taking profits on our altcoins. And that is probably when I'll be shouting from the rooftops that it's time to start locking in gains and prepare for the next major secular bear market. In any case, guys, going back to FXS, let's take a quick look at this chart. I recently shared, and I've been saying for some time now, that FXS has a high time frame buy zone, and that if we get here, if and when we get here, it's the best place for high time frame buys. And we are now in that zone, right? So that zone is basically this region here, which I've shared on Twitter a while ago. Essentially, the idea is quite simple, that if we are getting ready to reclaim these range lows, we have a series of lower highs, we have a series of higher lows, and I expect that this area of demand, which kind of coincides with this lower trend line, will act as support on a retest, and that should mark our low before we break out to the upside, take all these lower highs, reclaim the range lows, and at that point, we're simply targeting the range highs for, again, a minimum of 6x, but arguably much higher by the end of this cycle. So very, very, very clean setup here on FXS. And so here is HBAR, guys. I haven't posted many updates for HBAR on Twitter because there hasn't been much to update. You'll recall that in my last video, I talked about how I'd like to have seen a test of this higher time frame zone here in green, but we've seen some nice price action on HBAR. We've seen a nice pop to the upside. I think that there's a chance that the bottom may be in on HBAR Bitcoin. If it's not, then again, we'll revisit the green zone here, which would be a fantastic buy opportunity. But there's a chance that we've put in our bottom a little bit higher above that zone, right? In prior videos, there was two levels that I marked off of. This was the first, this was the second. You can see we dipped in the first. We've seen a break in lower time frame market structure by breaking above these highs. It's possible then that this first zone did act as support and marked our bottom, but there's still possibility that we move down to this zone. I'm not super confident either way. I'm just open to both possibilities. But assuming that we did find a bottom here and that this is the next move up beginning, the area of interest on HBAR Bitcoin is going to be the blue zone right here. I'd expect us to find support in this zone if the bottom is already in, and then continue to the upside. If this blue zone here is lost, then of course we look back again at this higher time frame zone below us. And a move like this would not necessarily happen from HBAR USD bleeding down. More likely, this would be a move that happens because Bitcoin is breaking out. We again know that Bitcoin may be on the verge of a move to 150K. A move to 150K on Bitcoin from current levels would be approximately a 30 to 40+% move to the upside. And so if we go back to HBAR Bitcoin and we look at the HBAR Bitcoin chart, a 30 to 40% move for Bitcoin to the upside with HBAR kind of just treading water, not moving up at all, that would be enough to send HBAR Bitcoin down to the lower blue region here. And if we move up much higher than 150K on Bitcoin and HBAR doesn't move with it, then we could end up here in the green zone. That's a 50% move to the downside on HBAR Bitcoin, but that could happen by Bitcoin itself moving up 50+% and HBAR USD still kind of consolidating with where it is now. So that's how we get to this green zone, in my opinion, even if the HBAR USD pairing doesn't bleed very much. So now moving to the HBAR USD chart, again, if Bitcoin's on the verge of a sort of a parabolic expansion to the upside here, then it's possible that coins like HBAR kind of tread water before really getting ready to break out. And again, if that happens, then we'd expect HBAR to maybe just go sideways and chop around here. Even if HBAR just does what I've depicted here and, holds the lows here at 12 cents and just kind of chops, moves down about 20-30% and Bitcoin moves up 30-40% to 150K, this alone would be enough to send HBAR Bitcoin down to that green zone. And so more so than watching the HBAR USD chart to position, I would be looking at that HBAR Bitcoin chart to position. We have the possibility of a 5-wave move on HBAR or the start of a lower time frame impulse on HBAR off of these lows. And so it's possible that this was the first 5-wave move. And in that case, it means that we should not see below 12 cents again. But again, that doesn't mean that we can't simply tread sideways here for a few weeks or even a couple of months. And in that time, if Bitcoin is rallying, then again, HBAR Bitcoin can bleed back down. At the same time, I don't want to necessarily completely rule out a move of HBAR Bitcoin back down below these lows. I typically don't like when we get sort of a double bottom, as they would call it. I prefer if lows are taken and liquidity is swept, but in this case, we got a double bottom. Again, it's possible in the one scenario that the bottom is here and that this is an impulsive move, but even if we somehow bleed down and take these lows, again, that doesn't affect the higher time frame on HBAR. And so just like Bitcoin, even if we get a lower time frame move back down below 12 cents, it doesn't mean that anything has happened to HBAR. It doesn't mean that this is extremely bearish. It's just another chance to buy cheap HBAR before the ultimate breakout. And frankly, I really wouldn't mind something like that either, because in my opinion, the longer that HBAR stays down at these levels, the more time I have to buy more and more of it before the ultimate breakout that I think is essentially an inevitability. On the higher time frame, this zone here, which you can view as like a major area of resistance, or the area where HBAR previously saw distribution that sent us back down to the lower time frame accumulation zone. And so you can kind of view this as HBAR ping-ponging between high time frame resistance or high time frame supply and high time frame demand, right? So the green zone is where buyers are stepping in, the red zone is where sellers are stepping in, and we are kind of for now locked in between those zones and just forming this massive accumulation base or consolidation, okay? And this to me is fantastic to see, because I know that the longer that we see this sort of consolidation, the more aggressive the expansion will be when it comes. So by all means, let this sort of consolidation continue on for weeks or months. It does not bother me, because ultimately I know that what's going to happen is a massive breakout. And the tighter that we get in this consolidation, the less volatility we see in this consolidation, the more that we see this constriction, the more aggressive the breakout will be when it comes. And I'm happy to wait for that to happen, because I know where this is headed. So in the best case scenario, even, we would take these equal lows, we would bleed down and kind of make this sort of tightening structure, and ultimately then see a massive breakout. This would probably happen if this were to occur like this, maybe post Bitcoin top or as Bitcoin is approaching its top, something like that, and just see a massive breakout through this multi-year long consolidation. And that to me would be like the dream scenario, because it gives us even more time to accumulate HBAR for pennies on the dollar before we rally to $1 plus. So this is the kind of the more bearish, I guess you could say, argument, because we see a breakdown below these equal lows for one more dip into this zone. The more bullish argument would be that our bottom is in here at 12 cents and that we're consolidating here in a wave 2 before we break out and accelerate to the upside. Either way, very bullish on HBAR. I remain as bullish as I have been for years now, and nothing has changed on that end. Again, with Bitcoin where it's at, the direction that a lot of these alts take in the coming days and weeks, including CRV, including coins like HBAR, including coins like CVX, it will depend a lot on what happens with Bitcoin here. And what I mean by that is that, again, if we're getting scenario 2, where Bitcoin is going to find support, either already has made a bottom or is going to find support in the green zone here at 110K and make a bottom and then reverse to the upside, then downside on most of our alts is relatively limited, right? Of course, if we get scenario 3 on Bitcoin, the one where Bitcoin is still a corrective structure and is going to correct further down than the green zone here, is going to correct further down than 105K, well, then in that scenario, yes, your alts are going to take some hits as well. At the end of the day, guys, at this stage of the cycle where we are unequivocally bullish on the higher time frames and we're simply waiting for expansion to the upside, any dips on your alts that are fundamentally sound and that have bullish high time frame market structure are simply opportunities, nothing to be panicking about, nothing to be afraid about. How low they go here is going to be somewhat dependent on which scenario we are in on Bitcoin. Again, scenario 2 versus scenario 3. We're down to just 2 scenarios. Scenario 2, the low being in, invalidation at 105K. Scenario 3, the low not being in, potential move below 105K. And just to mark off, guys, if we are seeing scenario 3, in the scenario in which we're seeing a running flat, meaning that these lows are defended, I would expect us to find support in this purple region here between 98K and 103K. And in the scenario where we're seeing an expanded flat, where these lows are breached, we'll then expect a dip into this zone here at 93K to 98K. So again, scenario 3 could be this, scenario 3 could be this. Either way, high time frames remain unequivocally bullish, and I will continue to update you guys on lower time frames on my Twitter as price action develops. I hope you guys have enjoyed this video. If you have, please like, share, and subscribe, and I will catch you guys in the next one.